Right. Perfect. Good morning, everyone. We'd like to thank you for joining us this morning for the Business Transitions Overview hosted by us, Lewis County Economic Development. I would first like to take the time to introduce ourselves. My name is Brittany Davis. I'm the Executive Director of Lewis County Economic Development here in Lowville, New York. And I would like to have Jenna introduce herself.
Hi, I'm Jenna Krager, the Economic Development Specialist with Lewis County Economic Development.
Let's just be quiet for a second.
And I would also like Dani to introduce herself, if she would.
Good morning. My name is Dani Delaney. Sorry. What? Sorry, my name is Dani Delaney. Sorry, my phone is doing weird thing. Anyway, I'm with the Center for Businesses in Transition in ANCA. Good morning.
Good morning. And I would like to say that Dani has spearheaded this program, the Center for Businesses in Transition, for the past 2 years now, and has done an excellent job in leading and collaborating and getting creative to help save North Country businesses through transition services. So this program would not be where it is without Dani. So thank you to Dani for everything that you've done for the North Country. So I want to give a little bit of background on the program. The Adirondack North Country Center for Businesses in Transition addresses the loss of area businesses by providing matchmaking services with potential buyers, access to planning tools, and connection with existing services. We all know that there are a ton of services here within the North Country, and it's really been all about just bringing these services together and putting it in front of the businesses that need it the most. More than 10,000 businesses in the Adirondack North Country are owned by baby boomers looking to retire over the next several years in the so-called silver tsunami. It is more than likely that most of these business owners do not have a transition plan. Nationally, while more than half of small business owners expect to retire within the next 10 years, fewer than 15% have an exit plan in place. And despite the fact that 78% of small business owners intend to sell their businesses to fund retirement. This is something that we're seeing very prominently here in Lewis County. Many of our businesses are owned by baby boomers, so this is the type of program that's extremely helpful to save small businesses here in Lewis County. The center is a dynamic partnership between regional organizations and individuals invested in the retention of local businesses and the future of our communities. The goal is to help owners sell their businesses on the open market, complete intergenerational family transitions, or convert to an employee-owned or cooperative model. Lewis County Economic Development is one of 12 regional partners across the North Country trying to address this issue. We have worked diligently for almost 2 years to work with businesses across the region. At the end of Q2 in 2020, the center currently has 100 prospective transitioning businesses, 2 interested business investors, 46 aspiring entrepreneurs looking to review their available business options, and over 96 organizations and community leaders supporting this partnership across the 14-county region that ANCA serves. So again, looking at the work that Dani has done and the work that all of our partners across the North Country have done, we're seeing some pretty positive results from this initiative. And the regional collaboration itself has been extremely helpful in bringing this issue, servicing this issue. And I would also like to note that we also have a brand new website and a guidebook to showcase all of these transition opportunities. So ownanorthcountrybusiness.com is the brand new website for the Center for Businesses in Transition. It's a very well done website, very clean, and it advertises all of the business opportunities here within the North Country. Dani has also worked diligently on coming up with a guidebook that really just has all the tips and tricks and services that are already existing here in the North Country to help someone either take over a business or sell a business. So we are very excited to kick off the seminar focusing on the most common business transition question: where do I start? I'd like to introduce our panel here today, as they all have relevant experience in the business transition process. Our first panelist is Ian Gilbert. He is an associate attorney with the Watertown law firm of Conboy, Mckay, Bachman, and Kendall. That's a mouthful. where he assists clients in the areas of estate planning, business formation and transition, and municipal law. He is a founder and former owner of Tug Hill Artisan Roasters, LLC, which is my favorite locally roasted coffee that I'm drinking here this morning. And Ian lives in Beaver Falls with his wife and 4 kids and is privileged to serve as a Lewis County legislator for District 4, covering the town of New Bremen. Our second panelist is Heidi Vanzandt. She is the previous owner of Sunnycrest Flowers here in Lowville, New York, and she owned and operated Sunnycrest Flowers for approximately 22 years with her husband, Eric Verkler. The sale of the business was scheduled to take place in January of 2018 to Heidi's business partner, but that transaction did not occur because of personal health reasons. Sunnycrest Flowers was successfully sold to an employee in October of 2018. And our last panelist is Megan Dolhof. She is the owner of Open Sky Wellness here in Lowville, New York. With a master's degree in clinical nutrition, Megan had a dream to operate a wellness center. Megan reached out to the previous owner of Open Sky to secure an office space to begin her practice and began to occupy the space on the weekends. After several meetings and hours of research, Megan ended up purchasing the business in July of 2017 and transitioned the business to include health, wellness, and nutritional consulting. So 3 panelists with a wealth of knowledge and a lot of experience in this transition process. So just a brief overview of how we will run today's seminar. We will do about 45 minutes of panel discussion with our 3 panelists and then about 15 minutes of Q&A. So Jenna and myself will be moderating the panel. And if you have questions throughout the webinar, please put them in the chat box and Danny will then read them off at the end of our panel discussion at about 9 a.m. All right. Does that sound good? Ian, Heidi, and Megan, you guys all set, ready to go?
Yes.
Yeah.
All
Yep.
right. Okay, so the first question we wanted to ask our panelists is just to introduce your transition experience. Where do you start and what is the first step? So let's start with Heidi and Megan since they have gone through that transition process. We'll start with Heidi. Where do you start and what's the first step?
The first step is to have a plan. And I would say to make that plan way ahead of when you think that you actually want to transition out of your business. And be aware that things can come up and that even though you have a plan in place, that that unforeseen circumstances may happen and that the plan may not go how you anticipated that it would. And then give yourself plenty of time before you really want to change. So, you know, I'm not a planner, so this was difficult for me, but to do it way ahead of time. So if you have a date of when you want to transition out of your business or you're hoping that it will be sold, back way up, knowing that it's going to take some time for that to actually happen. And then I'm a big list person. So I went through and made like lists of everything that was going to need to take place when this process actually started. And as it was mentioned in my bio, and I don't want to go into it in detail, but I thought that I had a really good succession plan in place. Because I had a partner in the business who was going to buy me out, and then something happened, and you know, because of health reasons, that plan you know, was gone. I mean, that succession plan like totally went away. So because she decided that she didn't want to purchase the business, we needed to sell it to somebody else. And so that really just changed the process up. So just, again, be aware that factors may come into play that you weren't really expecting. So give yourself plenty of time to put in place steps to get you where you want to be when you want to be there, I guess would be my advice.
Awesome. Thanks, Heidi. Megan, where do you start and what's the first step?
Yeah, so
So Heidi kind of spoke, she was selling her business, and then you can kind of see my perspective. I transitioned into a business. So the starting point for me was reviewing everything about the business. The most important thing, obviously, was financials for me, because I was worried about, if I was going to take over this business, am I going to be financially okay? So that was kind of the number one step for me transitioning into a business, was really studying and looking into the financials. What was I going to add? What was I going to keep for the business? Are there other revenue streams that I could explore? So that was most of my research when I was in that transition stage. Also thinking about, is the business kind of move-in ready? So what needs to be done if you are going to take over the business? Is there any construction that needs to be done? Any staff transitions? Things like that.
Awesome. Thanks, Megan. And Ian, anything from your perspective? Where do you start and what's the first step?
Yeah, Heidi and Megan hit on it perfectly. Really the most important thing coming into it or leaving it is to have a plan. And, Heidi mentioned putting together a list. Really the first big step, once you kind of have an idea conceptually of how the transition is going to be carried out, is to then put it down on paper. And that's a good time to bring on the business's attorney, to have that sit down discussion. The owners should come up with the framework for how it's going to work, and then let the attorneys kind of work out sort of the details of it. There might be some negotiation. You've obviously got costs to consider, but there are other things to consider as well. You have to consider the timing, when it's going to happen. Is this going to be sort of an all at once sort of thing? Or is it going to be like Heidi's original plan where you had a business owner with a partner already in place? Are you going to be bringing on a partner temporarily? Those all go into the plan. And then you've got a lot of continuing obligations of the owners throughout the transition process. And then later on, even after the transition is completed and the deal has been closed, are there going to be continuing obligations of the exiting owners or of the new owners to the exiting owners? So, those are all things that need to be considered, but absolutely the first step is to come up with a plan, and then to take that plan and put it on paper and get everybody on board so that there's no confusion later on, no second guessing, and hopefully you can avoid disputes and litigation and just make it as seamless as possible.
Yeah, that's a good point. And I'm not sure if you're going to get into this a little bit more later, Ian, but how important is it to bring in an attorney from the beginning? I mean, have you seen situations where maybe a business owner or an entrepreneur, they think that they don't need an attorney for a transition, and have you walked into some crazy messes because of that? I mean, how important is it to bring in an attorney, an experienced attorney from the get-go?
Right. Yeah, I'd say it's very important. And I would say also there have been times where I come into it where you've got, let's say, two family members, and it's going to be a very simple transition, and they are on the same page about how it's going to happen. And I'll be happy to represent both parties and basically just serve as the draftsman to get everything on paper. I'm not really trying to advocate one side or over the other. They're coming up with the terms of the deal themselves. But I still say, look, get an attorney involved, because there are going to be things that I know about, maybe that you'll miss, maybe tax consequences. And that's where an accountant would be useful as well. Legal consequences that would come up with the transition. Obviously, if there's going to be a real estate transfer, then you'll want to have an attorney to help effectuate that. So I would say it is very important in deals that I've been involved in, which are more kind of high stakes and more arm's length. So let's say not between family members, but between business partners. Then each party retains their own lawyer, and the lawyer serves more as an advocate in addition to a legal counselor. And so I'm there to try to get a good deal for the clients as well. And then, and those transactions go well because the attorneys, hopefully can work well together and save costs and everything. But I would say, unless you've done it before, I'd say it's really essential to get that expert advice from a lawyer. Even if it's just a matter of taking a few hours and letting them look over the paperwork, it's money well spent, I think.
Awesome.
Thank you. We'll go on to the next question. This is geared toward both Heidi and Megan. And again, if you have questions, please type them in the chat box. We'll get to them at the end. We'll start with Megan on this one. Top 3 things to focus on when taking over a business.
Okay, so as I mentioned previously, the staff is going to be very important. The business is already going through a transition as far as your clients can see. So I think keeping everything else as much as possible consistent is important. So doing a total overhaul of staff might not be in the best interest, depending on the situation. Every situation is going to be different, but if you can keep the staff, I think that's very important. Answer any questions that they might have, keep them engaged in the process, and keep them involved. I think that's really important, again, because it's a big transition for them too. Second, the financials is really important. What is the business worth? And this can have, you can have 10 people in a room and you can get 10 different answers for what a business is worth. That is really, can be very vague. So it's important to kind of research that. Just briefly, kind of what goes into that. What I learned, what goes into it is profit loss from the past, 3 to 5 years. So looking over the financials of the business, the tax information from the last 3 to 5 years. And then where it gets kind of hairy is that's multiplied by a valuation factor. And that's the number that can really vary. You can have anywhere from 4.5% to 8% to more or less than that. So that can make a huge difference in what a business is worth. And obviously, if somebody's selling a business, looking at Heidi's, for example, she was in her business for over 20 years. So she was very, involved in that and invested in it. So for any business owner, there's a personal connection, right? So they're going to think that their business is worth what they think it is, which is probably, more than somebody new coming in thinks it's worth. And then you have your inventory and assets, and that's all factored in. So it's really that valuation factor that can really vary. And again, very important to get an accountant involved in that to see what their professional opinion is on what the business owner thinks that number should be. Thinking about what the purchase price is if you can start a business separate for less than that. So thinking about which way to go. And then third would be thinking about what your customers or what your clients look like. Are they seasonal? Is it a year-round business? So what kind of clientele are you looking at? Are they regular clients? So thinking about what that looks like for the business, and if you're looking to expand or just keep it, how it is. So yes, my top 3 things: staff, financials, and customers, clients.
Great, thank you, Meg. Was there any specific resources that you used when thinking about the financials to find that information?
No, it's so vague that I actually used my accountant, and she kind of helped me out through that. And I also went through it with my attorney. So I had an attorney involved from the very beginning, which I agree with Ian is very important. So I just you can Google it. Google, business valuation. What is my business worth? And you will find a variety of answers. There's no set, number. I think, for like retail, it can be a little more set, but as far as like the service industry, or it just varies for different kinds of businesses. So I definitely get professionals involved, and Google, you can find some stuff on there.
Great, thanks, Megan. And Heidi, what are your top 3 things that you think people should focus on when leaving a business?
All right, so before I mention my top 3, I want to, since Megan was talking about purchase price for a business, I just wanted to address that for a moment also. And agree with her that there's definitely multiple ways to value a business. And we used a resource specific to the floral industry, how to evaluate, but then also had our accountant help us figure it out. And really there were 3 different ways that we evaluated it and decided kind of, okay, based on those 3, what do we think we should ask? And I would encourage people to, again, as Megan mentioned, be realistic about the price that you're asking. As she mentioned, when you're that close to a business and been doing it for a long time, lots of times you do think that it's worth more than it actually is, or that can come into play. So be realistic about what you think someone should pay to make sure, like, you want them to be successful also in running the business when they take over. So that is definitely really important, I think. And then my 3 things that I focused on getting ready to sell or leave a business. Also, Megan mentioned employees. So I think it's really important to be transparent to your current employees and to let them know what's going on. If for nothing else, it'll hopefully set their mind at ease, because that's an anxious time. People could be worried about if they're still going to have a job, or what this whole process is going to mean for them and their livelihood. So I, again, tried to, keep the people who were there up on what was happening, because also for the new owner, the less change, I think, is better for them as well. Because if you have seasoned employees that know your business and have been there a while, they have a wealth of knowledge that could be very important and beneficial for the new owner. And it's going to be better for the new owner and also for your customers and clients if they don't see a lot of change, and if they still are comfortable and have recognizable faces and voices when they're coming in to the business. Then my second thing would to make sure that all your accounts and affairs are in order. So make sure that all your accounts are paid. You don't have any outstanding balances. Also, let your vendors know that you're in the process of trying to sell, because that's going to be a change for them as well. And so just to, again, make sure that you have everything taken care of as far as like the finances and any, bills or things that you owe, so that won't come into play once the actual process is in motion of the sale. And then the third thing was to have a smooth transition. And for me, that meant for staff, again, that's really important, that they know the new owner, that they're familiar, that they know what's going on. Also a smooth transition for your customers and clients so that you hopefully retain all of those people, again, beneficial for the new owner. And then training, I put it as training, and I'm not really sure that that's the right word, but to have a smooth transition with the new owner so that there is time when the two of you, the new owners and the previous owner, are together and go through some type of a transition process so that they know the ins and outs of everything, and some type of overlap, or maybe some consultation afterwards so that could be built into the price. So if they have, questions after they take over, that could also be beneficial as well. But definitely the more that you can let them know about what's going on and how things are operating, not to say that they can't come in and make changes and do what they think needs to be done, but they should have a really good idea of how the business is being run at that time of the sale. So those are my three.
Thank you, Heidi. Can you touch on that transition period, the training perspective of that? I know it's going to be different for everyone, but how long would you say that communication goes on for between you and the new owner?
I think it really depends on the type of business and who buys it. I was fortunate enough to sell to an employee, so she knew some of what was happening, but had never done it from, done things from an owner's perspective, so didn't really have the ins and outs. But I think that's definitely a negotiable thing, and it depends on the type of business. If I remember right, I think I made myself accessible for, it was either 6 months or a year, because being in the type of business that I was in, the retail floral business, it really took a year to go through every holiday or every different scenario. So a year, I think, was a comfortable amount of time. And I will say that at the beginning, there were more questions than there were, after a certain amount of time. But I still occasionally, because I offered that up, I still occasionally get a question here or there. But I really think it depends on the type of business and the person also.
Great. Thank you.
Mm-hmm.
Mm-hmm.
I think just to add to the valuation question, this is something that the center has really, really been focused on since its inception, is to find the resources that help businesses go through that valuation process. And the small business development centers here in the North Country provide free valuation services to our businesses. So if you are looking for a local resource to help you with that valuation process, here locally, the Watertown Small Business Development Center can assist you with that. And there are a couple of other SBDCs throughout the North Country as well. All right, so next question. This is geared towards Ian, and he has a couple of slides that he wants to share. So Ian, share with us the top 3 things from a legal perspective that business owners who are looking to transition out, or entrepreneurs who are looking to transition in, should be thinking about.
Sure. Can you see it? Is it coming up?
Yep.
Okay, great. So just one little quick thing, just as a disclaimer, anything I'm offering here is just purely for educational purposes. And I will always state, if you have specific questions about a situation, I advise consulting with your own attorney, accountants, and business advisors. But as far as the 3 legal things, well, there's lots of legal things, to consider with a business transition. 3 things that are really big, overarching, that you should think about are the ones I have listed here. So the transition process and timing, and that actually, the other speakers really covered that really well, because a lot of that has to do with planning. The other is different approaches to shared ownership. And then finally, continuing obligations of departing owners. So there's sort of a chronology to it as well. The transition process and timing. So the first step is always the hardest, as they say, but it is the most important. It's very difficult for people, especially exiting members of a company, to, I guess, come to grips just with the need to exit. It's easy to kind of put that off. It's something that takes a lot of time and attention, but it's not, revenue generating activity. So, it's one of those things that's kind of like, like me needing to clean my office. It's the kind of thing that I know I have to do, but I put it off because I'd, rather be working on client matters. But it is very important. But you need to consider as an owner, as a departing owner, what the transition will look like before it becomes necessary. I'll get into this a little bit more, but a transition can become very suddenly necessary if there is an illness or a death or incapacity. And in that case, you might be looking at a very rushed transition if the business is going to continue on. And it saves you a lot of money in the long run if you have a plan in place and can follow through on that plan. So how do you do it? Well, first step, we've already discussed this quite a bit, is to plan ahead. So business owners who have in mind an exit plan, they should plan well in advance how that exit will transpire, making sure that it is well thought out, avoids disputes down the road. Heidi talked about how they had a plan in place for her withdrawing from the business, and that plan fell through. And that sometimes happens. Circumstances come up that make it so that you can't carry it out. But and hopefully there was an understanding, or they were able to kind of unwind the process, and it sounds like they were, and she was able to make it work so that she could exit the business in a different way. But they obviously put planning into it. So just a couple of quick examples. Professional services, which is kind of the world I live in, with a law firm or an accountancy firm, where quite often the attorney, like in a law firm, the associates sometimes will gear toward wanting to be a partner someday. That's sort of the traditional track. There is an agreement in place before you become an owner of the company that states in very clear terms kind of what the exit process is. So, one thing is there's quite often a mandatory retirement age. So I'm not sure what our firm is, but a common one I've seen is 70 years old. Old attorneys tend to stick around for a long time, and it makes sense to kind of have an orderly transition and to mandate retirement so that there's no surprises and they don't need to be booted out. They can just kind of, they reach that 70 years old, they have a big party, and then, they go their separate ways. Now with a small family business, quite often the planning is more just kind of an understanding between the members of the business. It should be something that is written down, but it's the kind of thing that's discussed over the dinner table. It's the kind of thing that's discussed over the years. And if you have, let's say, children or, nieces or nephews or siblings who want to take over a business, that'll be something that's sort of formulated more into your overall life goals. I think that was kind of more the model for how businesses continued, in centuries past. It's a little less common now. Oftentimes businesses will transition outside the family, which is perfectly fine. It's ultimately up to what the owners want to do. Now, again, what can happen if no succession plan is formulated? Like I said, let's say you have a situation where somebody is the owner of a business and they're getting up there in years, or maybe their health is starting to fail. And if that individual were to die, then you might be faced with a situation where the business might be forced to dissolve. It might have to go through probate. It might become a probatable asset, and then suddenly an executor is tasked with having to unwind the business or try to figure out if there's a way to continue the business. Now, that's very good if you're a buyer looking to get into a business, because you might maybe you were interested in transitioning into whatever type of business it is, or owning a business like that, and there's one on the market for you to purchase and you can get a good price for it. But if you're exiting, you don't want to be under the gun to try to get that business out quickly, because you might not get a good price. It might not be on the terms that you want. really dangerous situation is, let's say you have a business that is owned by somebody who becomes incapacitated. So maybe with dementia, maybe there's an accident and they're in a coma, something like that, and there's no plan in place. What's supposed to happen? What's going to happen with the employees? What's going to happen with the clients and the customers and the inventory? And that can be a really scary situation. And if there's no plan in place about what's supposed to happen, then it can be scary for everybody. But that's, something to think about. So different approaches to shared ownership. This sort of dovetails with the last section about planning ahead. One of the things that's a really great thing to do is just to bring on new owners before the older members exit. And that's a very common thing to do, especially with small businesses, or with, let's say, again, using the example of professional services, where you have a rolling, from one generation to the next. Like the law firm I work at is about 150 years old. So it's obviously seen many generations of attorneys come in, and the transitions are, hopefully seamless. But if you really are looking at a business that's going to cross from one generation to the next and continue on for a long time, then bring on the new owners before it's completed, before it's closed, and then that's a good chance for both parties to see if it's a good fit. So keep moving here. Things to consider: if your business isn't formed as an entity, if maybe you're just operating it as a sole proprietorship, and you want to bring on new owners, that's a good time to consider transitioning into an LLC or putting it into a corporation. And there's kind of a whole, we could do a whole lecture on sort of what goes on with all of that. But that's usually the first conversation that I have with people looking to transition is, can we put it into an entity? Because the nice thing is with an entity like an LLC is you can have it so that the business has a perpetual existence, so that one death of an owner, it won't end the business. It won't cause that business to dissolve or go through probate. The business can continue on even though the owners may pass or may move out. Another nice thing to consider with having shared ownership is it can make licenses easier to transition. So a liquor store, restaurant, any type of business that has professional licensing requirements has to form as a professional corporation. Your tax registration, so your permission to collect sales tax, if you can bring on the new owners and they can join into that entity as a co-owner, then that transition down the road will be much easier. And the point of that is to maintain continuity of operations so that the customers who rely on the business, the clients, they won't get a sense that there's any transition. It's the same business that they've always come to. And there won't be any interruption in services because obviously they might turn to somebody else for whatever it is that they're looking for. Who to bring on? So this, is something to consider with any type of business that's looking to expand. Are you going to bring on family members? Are you looking to transition to family members? That's a pretty common one. Or are you looking to go the way Heidi did and sell the business to a dedicated employee? That's certainly an option as well. And maybe there's somebody who's really invested in the business personally, and that's a way to reward them as well, as give them a stake of ownership, give them some control. And that's just, that's certainly an option. A final thing to think about with the different approaches to shared ownership are buy-sell provisions in the case of an LLC, or a shareholder agreement in the case of a corporation. And the purpose behind this is to make it so that so in New York State, in most states, there's what's called a prohibition on unreasonable restraints on alienation. And that's just a long legalese sort of term for saying that you cannot prevent an owner of the business from selling their interest in the business. But what you can do is you can set certain guidelines for it. So for example, and this is a common thing that I'll do with any type of business where there are multiple owners, we'll have a requirement in it that if somebody wants to get done with the business and they want to leave, they have to first offer it back to the company, their interest in the company. And that can be either on an agreed to value, or you can have an accountant come in and do an appraisal of the company, figure out what it's going to be worth. That goes to the discussion about valuations. There's certainly lots of different ways to approach it, but that is a good provision to have, just so that you don't end up in a situation where an owner of a business wants out and there isn't a plan for how they're supposed to exit. So moving on. So the final thing to think about that I could think of for the presentation are just the continuing obligations of the prior owners. And the other speakers hit on this as well. So new owners will often feel overwhelmed with the responsibilities of the business, but there are ways to make the transition go more smoothly so the business can continue to operate well. One is, and I've seen both of these strategies, to keep on the prior owners as the consultants. So in a law firm, it's not uncommon for, if an attorney reaches the mandatory retirement age, they won't be a partner in the business, but they might be listed on the masthead as being of counsel. And so they're basically transitioning from being an owner to being a private contractor. They'll maybe work just part-time. They'll get paid well for the time that they put in. And a lot of that is to help keep clients in with the firm, especially the older established clients, the ones that require a lot of work. And the idea there is just to help transition them to maybe newer attorneys or other people in the office. But you can certainly do it in other types of businesses as well. You know, have the prior owner kind of working just part-time to come in and offer their expertise, or maybe just they're available and you can call them up and they can help answer questions. Family farms, it's a common thing for farmers, especially if there's, you know, a son or a daughter who wants to take over the farm, for the parents to sell the farm, and then mom and dad continue to, you know, drive the plow and you know, make the agreements with the purchasers and work on equipment and things like that, all the stuff that they used to do, but maybe they're not listed as the owners anymore. And especially with farms, because they are often asset rich but very cash poor and have very low income, very small margins. The importance of having a transition plan, and one that may be carried out over a long period of time, it's very important. It's especially important for them. But all of that should be worked into the terms of the agreement in either case. With a farm, it's probably going to be more just kind of an understanding. You don't have to state exactly what those things are. And it may feel a little bit uncomfortable with family members. And then the final thing that I have on here is the non-compete agreements. So this is something that will often go into a business agreement. And the idea there is to protect the new owner. And this is a negotiated term, you know, that you might say that the non-compete agreement for me is worth a certain amount of money and I'm willing to pay a little bit more. But what you're doing is you're asking that departing owner to promise not to compete against you. So it happens a lot. Somebody sells the business, they're out of the business, they're looking to retire, and then they really regretted making that decision. They want to get back into the business, so they start going out and wrangling up their old clients. You know, maybe they set up shop across the street, something like that. There are things that the new owners should do to protect themselves, just to make sure that doesn't happen. It's just good business practice to have in there. The thing to be aware of with non-compete agreements is just that they really need to be limited in scope. So they have to cover a very specific area and be specific in terms of what types of activity are prohibited under the agreement. The reason being that if they're not, a court might look at it and void it for public policy reasons. And I remember reading a case in law school where there was, I think it was like the only thoracic surgeon in southwestern Kansas had a non-compete agreement with the departing thoracic surgeon in the practice. And this departing one said, there's plenty of work here, I'm going to get back into it. And he did. And he was sued by the new owner. And what ended up happening was it went to the courts, and the courts voided the policy. They voided that provision in the contract requiring that the old exiting doctor not compete with the new one for public policy reasons, that in southwestern Kansas, there just weren't very many thoracic surgeons, and there was an overarching public policy need to have this in there. In some professions, like I think a lot of medical professions, they will be banned outright. They're very common with attorneys. But again, they have to be limited to a particular geographic area, and then they have to state the purpose as to why they're doing it. But that's just something to consider, especially if you're in a very specialized field, that, or if the person you're buying the business from has a lot of name recognition, that you may want to have a non-compete agreement in there. And then, you know, that can work into keeping them on as a consultant, keep them close by. If they really want to do some work, they can do work, but it should be for you. But that's all I've got. So I'll turn off the screen share. That's kind of through a lot of information, but
No,
hopefully
all really
useful.
good advice. Thank you so much.
Jenna, you're on mute.
Sorry. This is for all the panelists. Talk about the transition process and what are the steps to complete the transition. We've already kind of touched on those, but I think you can simplify it a little bit for the audience. That'd be great. Heidi or Megan, you want to start?
Sure, I can start. The very first thing to do, which we've already talked about, is to get an accountant and attorney involved. And I would also add to get the, Naturally Lewis or the Center for Business and Transition. Is that its own thing? The Center for Business and Transition?
So the center is a program and initiative through the Adirondack North Country Association, and
Oh.
INCA for short. INCA is based out of Saranac Lake. They are an economic development organization that serves 14 counties across the North Country region. So yes.
Okay. Yeah. So I wasn't aware of that when I went through my transition, which would have been helpful.
I don't think it was even a thing when you
Yeah.
transitioned.
So definitely get their help. So get other people involved. Don't try to go through it by yourself. I got my family involved. So I had the help of them. I'm fortunate to have business owners in my family. So my sister, my father, my brother are all business owners. So they were very helpful in my transition. So get, friends, family involved, get their advice, what they think about it. Talked about reviewing financials and revenue, thinking about what the current and past revenue has been, but also what you would like to change or add to the business. Is there any new revenue stream that you could develop? Definitely meeting with staff, keeping them involved again, and doing a walkthrough. If you can be involved in the business before the transition, that would be helpful. I was not. I met with the staff before, and I had several meetings with the previous owner, but I did not necessarily work for or in the business before I took over. So it was just kind of a different situation. And every situation is going to be different. So I didn't have the opportunity to work in or for the business before I took over, but I would say if you can, definitely do that.
Thank you, Megan. Heidi, you want to touch on that?
Sure. So my list was, and some of these have been mentioned before, but to make themed checklists of everything that need to be done and do that, ahead of time, because there are going to be like a lot of little things that you might not think about when you're going through the process. So start like a running list, but themed checklists were really helpful for me. And then prioritize each task that's on that list as to like what needs to be done first, things that will take the longest, that kind of thing. Make sure, and this might seem like an obvious one, but to make sure to provide like contact names, emails, and phone numbers of all suppliers and vendors, including like online vendors, along with like passwords and that kind of thing, so that the new owner can get into your accounts. Obviously, credit cards and that kind of stuff would need to be changed, but you want a smooth transition for them to be able to use all the same people that you have been, if they are interested in doing that. And then know that things are going to take longer than you hope they will, or you plan for them. It's just the way it works, that things, they just always take longer than, you hope or want them to. to have good communication between the buyer and seller, and to talk frequently and update each other so that you know what's happening on their end and any things that maybe they're waiting for that are taking longer, and they know on your end also. So that you know what the process or how the process is going, like on each side from the buyer's and the seller's standpoint. Then build in time for both of you to go over everything and include any plans for consulting after the sale if they're interested in that and if that is necessary. And then I would just throw in to help the new owner as much as possible, or as much as they want, and with the things they want. Just offer up that, you know, you will be there for them, or you will help them ahead of time with whatever they need. And the things that you might think are important and that they need may not be the things that they think are important and that they need. So again, just communication, I think, is really crucial throughout the whole process as well.
Thank you, Heidi. Great points. Ian, anything else to add?
Sure. So, you know, legally speaking, there's really 3 steps to the transition process. The first is, as we said, the planning and formulation phase. And all of that is gearing toward creating an agreement and putting that agreement on paper, and everybody signs it. And that agreement, depending on whether it's going to be a gradual transition over time, that agreement will state the steps and what's supposed to happen and when, or if it's an all at once sort of deal, then it'll set the closing date. And then the second step then, of course, is the actual closing itself, which is when that transfer is effective. Now, again, the transfer might be taking place over the period of months or years if you're bringing on a new owner, and they're kind of coming in slowly to replace an old owner. But if it's in the case of a closing where you're just selling your business all at once to a new owner, then it's your actual closing date, which will happen at you know, one moment in time. And then the next step, the third step, really is just the post-closing, I guess, and that's where you've got maybe continued consultancy. Maybe there will be some loose ends that need to be tied up. The attorneys will still have some work that needs to be done, like if anything needs to be made a matter of record, or but yeah, there's 3 steps really. There's the planning and formulation phase, there's the closing phase, and then there's the post-closing, sort of the winding up, wrap-up phase.
Wonderful. Thank you.
Right. Last question. If we can just kind of wrap up this discussion for this morning, let's go through each one of you. And if you could just give us, what is your one piece of advice for someone looking to transition in or out of a business that our attendees on the webinar today could take away?
Want me to go? I'll go.
Sure.
So I wrote down, develop a good plan, which we've talked about a lot. Be patient and be flexible.
Megan?
My one kind of takeaway or piece of advice is to study the purchase price, the valuation, and you know, figure out if transitioning in is going to be worth it for you.
Awesome. Thanks, Meg. And Ian?
Since those are really good, I would definitely endorse those. But I'd say, just for another piece of advice, it's the same thing I tell all my clients, is that a deal is only as good as the people behind it. So just make sure that the people you're entering into an agreement with are people that you trust. And even if something's written down on paper, that's not necessarily going to mean that you're going to get the result that you want. The goal should always be to avoid litigation, to avoid having to dispute or seek dispute resolution outside of just normal negotiation and cooperation. And that, you know, that's where an attorney can only get you so far. Really, you have to make sure that the people you're dealing with are people that you trust and can work with.
Awesome. Great points. All right. So I think, you know, as we were talking today and hearing our 3 panelists talk, we've been hearing a ton of common themes that we've been really pushing with the Center for Businesses in Transition. Formulating a plan many years before you plan to transition is extremely important. Looking at the financials, keeping staff involved, being extremely transparent, and getting professionals in on the transition plan from the very beginning, bringing in family and friends, extremely helpful. So I'm not sure if anyone has any questions for our panelists today.
And if folks do have questions, you can feel free to unmute yourself to ask them, or you can send them in the chat box, whatever you're most comfortable with. If nobody has one, I do have one from a session we had the other day that might be sort of helpful. Megan, when you took over, what was the response of the employees that were already there? And like, how did you go through, coming in from the outside, like, how was that transition for you in terms of working with a bunch of new people, maybe that you didn't know, and like coming in as the outside owner? And how did you sort of work through that?
Yeah, and I didn't know any of them. So, they were it was a change for them. So they were kind of leery of it, but I think it helped that the previous owner was transparent with them, as Heidi advised. So that was helpful. And what we did is we just had a meeting with everybody, myself, the previous owner, and all the staff. And I think that really helped kind of ease things for them, that they were able to sit down with both of us together, ask questions on how, things were going to be. And I think that was really helpful for them, and just being open to them and, letting them know if you have questions that you want to ask privately, allow them to do that. So yeah, just being available and open and transparent with the staff, I think is very important.
Great, thank you so much. And I, kind of Heidi, from the other end of that, did you prepare your employees for transition of the new owner? Like, what did that look like from that perspective, if you don't mind sharing, if you do?
No, and I think because I had an employee that was purchasing the business, that was a little different than someone coming in from the outside. So they already knew her, but we did keep people, again, we were transparent and kept everybody up on what was going on. And again, the process took longer than what we thought it was going to. So it's like it kept, getting pushed back a month because of this, that, or the other thing. So again, just keeping them up on what was going on. And I think maybe because it was an internal person, it was maybe less stressful for everyone, although not knowing, people are different when they're in different positions. So there was a little bit towards the end of like overlap that was a little awkward, because the business was still mine, but some of the decisions were being made by the new owner. And looking back, I would have handled that transition a little bit differently. And I think part of it was because of how long it was taking. So mentally, I kind of had checked out already, like I'm already done and this is, over, when it really wasn't. So that's just kind of a cautionary thing too, is just it's really not finalized until the papers are signed. So I should have been more engaged, and still being, especially with an employee buying, that, this business, is still mine, and how things are going, I'm still the one making the decisions until the transfer. So yeah, I don't know, hopefully that answered your question.
Yeah, that was a great answer to the question. And I think just really real, like, so much of the transitions are just about relationships, right? And like people being people. Yeah. And I think something we got caught up, when I'm talking to business owners, we often get caught up in this sort of, oh my goodness, so what about the valuation? And which is really important, but so much of it is just this sort of personal and interpersonal relationship.
Mhm. Very
Um,
true.
So thank you so much for bringing that up. And I think you kind of brought up another question. Megan, was there some Heidi just said, she would have done that part differently. Megan, is there something that you would have done differently?
I don't think so. I think, I did a lot of research and thinking about it beforehand, and I don't think I would have done anything different.
Well, thank you so much. Does anybody else have any questions? Feel free to unmute yourself, or you can add them into the chat box.
I think Danny, if, Ian especially, I think he is a great resource to anyone who is looking to transition in or out of a business. And we can certainly provide his contact information as a local attorney who has a lot of expertise in transitions.
I would, of course, be willing to talk with anybody. If anybody has any questions, outside of this, feel free to reach out to me.
Yeah, me as well. I'd be happy to talk to anybody who's thinking about selling a business. I'd be happy to.
Great. I think, Danny, if we don't have any other questions, if people have questions after the fact, they can certainly get in touch with Danny at the Center for Businesses in Transition, or you can reach out to us at Naturally Lewis in Lewis County. But I would like to thank our panelists today, Heidi and Megan, for sharing your transition experiences, and for Ian providing your expertise on this subject matter. And obviously we understand how important this is, especially in the North Country. So thank you guys for all that you've done for our communities. And thank you, Danny, for all you've done for the North Country in this program. Like Megan said, this is a vital resource, and unfortunately we weren't around when she transitioned, but I think it's definitely a program that's very helpful for businesses all across the North Country.
And if folks have a second to want to do this again tomorrow and learn about how to market their available business, it's the same login at 8 a.m. tomorrow. And so the Saranac Lake Area Chamber of Commerce and the Franklin County Industrial Development Agency, Economic Development Agency will be hosting that program tomorrow. So log back in, learn about how to get your business out there to see if somebody might want to take it over.
Awesome.
Well, thank you, everyone. We hope you have a fantastic day.
Thank you,
you.
everybody.
Yeah,
Have a great
thank
day.
you. Bye.
Thank you.